How's it going, everybody? It's Stas here. So in this video, we're going to be talking about and breaking down the top stocks that I'm looking to buy heading into this week in the stock market. And I also want to break down some technicals here on the S&P 500, going over what happened last week in this index and what could we potentially expect this upcoming week. And we're also going to break down some companies here that are reporting earnings this upcoming week. And I also want to go over what the futures are looking like right now when it comes down to the E-mini S&P 500, the Dow Jones, and the NASDAQ. So a lot to go over in this video. If you guys find value, hit that like button for me. Let's try to get 400 likes on this video. I challenge you guys, 400 likes, and join our Strive Smart Discord chat and Facebook group. Those are linked down below, free of charge to join, and you can also get 2 free stocks linked down below as well from Webull. Those are valued up to $1,400. All you have to do is deposit $100 and you get 2 free stocks, and I also get 2 free stocks since it is on affiliate links. So let's get into it, guys, starting off with the S&P 500. And very clearly last week we saw a big resistance at 33.80 to about 33.90, right? There's no doubt about it. The S&P struggled under its main resistance right now, which is the all-time high back from February. February 19th, I believe, on the dot is where the S&P hit an all-time high at 33.93. And we talked about this last week. I mean, it's very clear the S&P struggled there on Tuesday, Wednesday, Thursday, and Friday. So for this upcoming week, watch for 33.90. If that takes out, right, if the bulls get out of there, this thing is going straight to all-time highs, and from there, we might be going up to 3,400, 3,450, heck, maybe even $3,500 on the S&P. And let's say we fail. We could always fail, guys. We can always go down. The markets can throw curveballs and surprise you all the time. Let's say we don't break 33.80. Let's say we don't go to all-time highs. I mean, we could be going back down to 33.30, which, if you guys remember, that is the previous old all-time high before the all-time high right now. So we can see before we hit 33.90, we actually hit 33.30, then we pulled down, then we rallied up to another all-time high. So let's say we don't break out of 3,400, 33.90, we might be pulling back down to about 33.30, maybe right on top of this 50 SMA here on the 4-hour chart. And quite honestly, guys, with the way that, again, we've been seeing resistance here the past 4 days, the market could literally be tuning up for that. It can be getting ready for a pull down, and this is where I'm watching the futures, right? If the futures end up turning red tomorrow in the morning, right? If the large caps are red, they're bleeding a lot, we could be heading down to 33.30. But judging off the futures right now, the E-mini S&P is up $6, up about 0.2%. The NASDAQ futures are up 20 points, up 0.2%, and the Dow futures are up 55 points, up around 0.2% as well. So at this point, futures are gapping up. They are looking green, but as we know, a lot can change overnight. We can wake up, for all we know, and the futures could be down 0.5%, 0.3%, which could indicate, hey, we might be pushing down tomorrow, and we could end up going back down to that 33.30 level that we just talked about on the S&P. So as of now, it seems like the bulls are in charge, guys, at least in the beginning here of the futures market. Again, ES up $6, NASDAQ up about 20, and the Dow up about 55. Those are the futures, not the indexes, guys. You obviously know the indexes open not on Sunday, but on Monday at 9:30 a.m. Eastern Standard. And the futures, by the way, on Sunday, they open up at 6 p.m. Eastern Standard. That is where you can see what the Dow, the S&P, the NASDAQ futures are doing, gold, silver, crude oil, and so many others. So at this point, watch those levels and just watch the futures in general. I'm looking for some direction this upcoming week to see if the bulls are going to take us higher, or hey, maybe we see a pull down, right? So keep an eye on those points. And when it comes down to earnings this upcoming week, this is it. We all know a lot of the big earnings are behind us, and many people are saying, Stas, do we have any big earnings coming up? And the truth is, yes, a lot of big companies are reporting this upcoming week. Take a look at the screen here. We have JD.com tomorrow pre-market. That is a Chinese e-commerce company there. And on Tuesday, we have a lot of big companies here, American companies. We have Walmart. We have Home Depot. We have, that's pretty much it on Tuesday. We have Kohl's, but Kohl's, I mean, who shops at Kohl's anymore? I know my mom used to take me there years ago when I was a youngster, but, you know, I haven't been to Kohl's in years, but they're reporting, so we'll see what ends up happening there when it comes down to some retail. And we have Lowe's on Wednesday. We have Target on Wednesday. So a lot of retail plays are reporting earnings this week. And also on Wednesday, arguably my most anticipated earnings is NVIDIA, ticker symbol NVDA, semiconductor company. Very interested in seeing what they're going to end up doing. On Thursday, we have Alibaba, another big, massive company that is in China. We have Ross. We have BJ's, right? And then on Friday, another play that I'm interested in here, we'll get into it in a little bit, is Foot Locker, ticker symbol FL. And these are the main ones, guys. And of course, subscribe to the channel, as throughout the week when we do our market updates, we're going to break down all of these companies and exactly what they reported in terms of earnings and how we're going to play the stock, whether it's an overreaction to earnings, we rally up, you know, after earnings, we sell off. So make sure to subscribe so you guys can see exactly what these companies end up doing and my take on them. And as of right now, guys, out of all those companies, I mean, many of them, if we briefly take a look at them, Home Depot is at an all-time high, right? Home Depot's at an all-time high. Target, all-time high. Walmart, all-time high. Lowe's, pretty much all-time high. So I'm not too interested in playing these, right? A lot of these benefited a lot from the crisis, right? All these businesses were open. People were doing home renovations, if I can even pronounce the words, guys. They were doing those from Lowe's, from Home Depot. So I'm interested in seeing those sales. And of course, Target, Walmart benefited a lot. You know, one could speculate, right? But out of all those, the one that I'm most interested in, believe it or not, is Foot Locker. Foot Locker ended up going down about 2% on Friday, down to $28.75. And first and foremost, yes, they're struggling at $30. That is a worrisome sign to me because we didn't break out of 30, right? The bulls did not break out of 30, and we've struggled under 30 since the middle towards the end of May. So it's been about 3 months now. Foot Locker's been consolidating at around $30. But I think with the solid earnings report, we could get out of 30 and maybe start to get back up to the mid-30s. Mid-30s, 35, 36. I mean, you guys saw a couple days ago, Foot Locker came out and said same-store comparable sales for quarter two, they're seeing those up 18%, 18%. And they see adjusted EPS for quarter two around 66 cents to 70 cents. So they're looking to make a profit, but the estimation is negative 60 cents. So the estimate is they're going to lose 60 cents. So at this point, we saw Foot Locker, as that news came out a couple days ago about the 18% comparable sales, we saw it go from $27 up to $36, which again is that resistance from back in the middle of May all the way till now. And the funny thing is, we broke $30, which was the resistance, and we filled all the way up to 35, which if you guys look, 35 is where we spiked in the beginning of June. And the crazy thing is we filled that entire gap, and now we pulled all the way back down, pretty much giving back all of that 20% gain. So I'm looking at Foot Locker here as an entry point, maybe into earnings, right? Earnings are again on Friday, so we could get a play heading into earnings. And me personally, I'm not going to hold through earnings on this stock, but if we get something heading into earnings, maybe even the following week after they report earnings, I'm really interested in Foot Locker, right? And another stock here is Upwork. Upwork is one that I have a position in here. I've been scaling in to Upwork over these past couple of trading days, and ever since they reported earnings, I mean, this stock dropped like a brick. It reported earnings, pretty solid earnings at that. The stock went up to about $19 that day, and it sold off all the way down to about $13-14. And one thing that I like about the sell-off is it held a big level of support at around $14, right? This was a resistance stemming back from the middle of May. So for me, guys, the fact that it's holding 14, we're holding that 180 SMA at a higher low, we're trying to get out of the resistance here from back on the 9th to the 10th of August. That's a good sign that the bulls are taking over. And for me, I'm already in this one, again, like I said. But if we're able to get out of 15.50 and start to get out of this big resistance, out of $16, that is where I'm looking to really capitalize on Upwork and maybe even add more, because quite honestly, I see this one getting back to $18, $17.50, $18, and even from there, I mean, we could get even higher. I mean, we've seen Upwork be a $25 stock in the past, and if $17.50, $18 breaks, I mean, it might not go to 25 right off the bat, but that, based on these technicals, that is where it's headed, right? $20, 21, maybe mid-20s eventually, right? That's kind of why I'm watching Upwork here. And another one that I already have a position in is NEO. They reported some strong earnings. The stock went from $16 down to about where it is now, $13. The past 1, 2, 3 days, we've seen consolidation at around $13. And I added some on Friday on this weakness at about $12.70. And for me to add more, I'm going to need to see a definitive break out of 1330. Right here, right? Pretty much where we've held support the whole month of August. I need to see a break out of 1330 and ultimately, honestly, guys, a break into the $14 range. If we get that, that is where I think NEO is going to be on a straight shot back to the 15 level, high 14s. And that's kind of what I'm looking to capitalize on here when it comes down to my trades. So I'm watching this dip on NEO. I like it. About $3 of potential has been opened up, roughly 15 to 20% there. And I'm also watching silver and gold, guys. These two right here, they're, I guess, kind of the underdogs, I guess you can say, the precious metals. But now with Warren Buffett coming in and picking up some Barrick Gold, ticker symbol GOLD, maybe, just maybe, guys, this is going to bring in some other institutional investors. It's going to turn some retail investors, some of the people in Main Street, maybe they're going to start to turn a light onto these gold stocks and gold in general at this point, since the Omaha, the big goat Warren Buffett is starting to buy, right? This might bring a lot of attention to gold. And for me, guys, I'm watching in particular GLD. GLD is one that I'm also in here. I like this. This is a pure gold ETF. It tracks the price of gold. It's not a gold miner stock. It is simply an ETF that tracks the price of gold. And let me say that again. It is not a miner. It's not a miner play like what Buffett bought, but it's simply an ETF that tracks the price of gold. And speaking of gold, I mean, we see it went from 2,100 roughly down to about 1,900. It's holding the 180 SMA here on the 4-hour chart. It's recovering. And matter of fact, the futures are up about 3 points right now, up about 0.2%. Nothing crazy, but they are green nonetheless. So I'm looking at this weakness on gold. I really like it. I think it's a buying opportunity. So I'm looking to buy more of GLD. And I'm looking at GDX, which is a gold miners ETF. This is a miners play, different from GLD. And GOLD, which is Barrick Gold, what Buffett bought about $500 million in. This, I believe, is the biggest, if not the second biggest stock in this ETF. So don't be surprised if GDX rallies tomorrow. If GOLD rallies tomorrow, I mean, it already did after hours. You guys can see it's up about $2 as that Berkshire 13F came out that showed Buffett ended up buying GOLD. So we might see a pop in the miners this upcoming week. I honestly think we will be. And quite honestly, I have a lot of cash in the swing portfolio, like I've been saying, and I'm looking to buy some GDX tomorrow. Quite honestly, GDX is on my radar. I'm looking at some call options as well, maybe some $45 calls. We'll see, a couple months out. We'll see. I'll break those down, for sure this upcoming week if I do end up buying some contracts here. But I'm looking at GDX, GLD, SLV is another one that is very similar to GLD, but the only difference is it tracks the price of silver instead of tracking the price of gold. And a lot of people are saying, hey, silver's more beaten down. It's been beaten down over the past couple of years. It might have even more potential right now than gold, and it very well could be. We can see it's down about $3 from its highs recently. It hit almost $30 an ounce. Now it's trading at about $26.60 an ounce, up 2% right now. When it comes to the futures, they're up about 51 cents. So we could be starting to get some momentum back up, some bullish momentum in silver. I mean, we can see it clearly recovered off of this massive sell-off. We held a higher low here on the 180 SMA, so watch for SLV this week. We could be seeing an upwards move here, and we could start to get back up to the 25s, 26s, 27s even here on SLV. And another stock I'm watching is NFLX, and this is also a stock that I have a position in right now, and I'm looking at it, and I'm interested in adding more into it because we can see clearly last week, despite tech, I mean, take a look at the NASDAQ, guys. Last week, tech was not the hottest. I mean, saw a big drop to about 10,800, rally back up to 11,002. Then we sold off on Friday. So it wasn't that crazy of a week for tech, pretty much consolidation there. And Netflix is a lot of the same. And one positive thing I'm liking about this little comeback the past 3 days of trading on Netflix is we can see it ended up holding a key level right around 470, 465, 475. This is where it held, and it's held over the past month and a half, ever since the beginning of July. And noticed how back in the end of June, I mean, it was a resistance right around 470. So the fact that we pulled down from about 510 over the past couple of trading days down to about 470, we held it on the 5-day, 5-minute. You guys can see we're breaking out of the downtrend here, downtrend out of the moving averages. That is a very good sign. On the 20-day, 1 hour, you guys can see that as well. The fact that we're seeing this is telling me, okay, Netflix is tuning up for a move, maybe back up to the high 480s, 490s, maybe back even into the 500. So I'm watching it at this point, and ultimately, I think out of all the big tech stocks, and you guys could agree, I mean, Netflix and Google are the most attractive today. Are they both overvalued? Yes, they are arguably overvalued, but that does not mean they could rally even more. They can't rally even more from here because we all know they could rally more, as we've seen tech just on an absolute tear as of late. And the reason why I'm saying Google and Netflix are the top two, I'd say, because Apple is at an all-time high. Amazon is pretty much at an all-time high as well. Facebook is at an all-time high, and Google and same thing with Microsoft here, pretty much at an all-time high. And Google and Netflix are the only ones that are decently off their highs. I mean, Google's down about $80 from its all-time high. Netflix at this point is down about $100 off the highs. So that is why I'm looking at these as more potential in the short term, because quite honestly, they've been beaten down a bit more. And a couple other ones here. Meli, I like to call it MELI. This is an Argentinian company. It's Mercado Libre. This is a company that's actually owned in many of the ARK Invest active ETFs, and they reported a very strong earnings. I mean, they churned out $1.11 EPS. If I recall correctly, they were actually expecting literally 2 cents. Yeah, literally 2 cents, guys, of EPS, and they came in at $1.11. Revenue came in at about $900 million, actually $880. $880 million versus $740 million estimated, so very strong earnings there, and the stock is off about 130 from its highs. We can see over the past couple of days a clear recovery on this 180 SMA, so this could be rallying back up to the 1200s, high 1200s, which is where I'm looking, quite honestly, to take advantage of it. Another one is CLX, Clorox, arguably one of the best pandemic stocks, crisis stocks here, at least in this crisis that we're in right now. And this one's down about $20 from its highs. That is a profit window opening of around 10%. We got news on Friday, which in my opinion is mind-blowing, that they're producing around 1 million disinfecting packages or boxes. You know those Clorox, what do you want to call it? Whatever, packages. They're doing 1 million of those per day. Yes, guys, per day. So this company is churning money and churning product, which equals money, and we'll see, if this recovers. I mean, we're at a spot on this 180 SMA, which has held over the past 6 months here as a support. So we could be rallying. Who knows, guys? If we get back up 225, 230, this could be a breakout back to the 240s. And two more to go over here. ULTA is one that I really like, especially as we've seen a breakout of 220, $3 a day on Friday, up 1.3%. We held 220. Now, all I want to see to get more upside momentum is a breakout of the high from last week. The high from last week, actually, no, take that back, erase. That actually already happened. We already took out the high from last week at about 226, and now, quite honestly, 230 could break, and that is where we might see the big move up to 250. And mind you, they are also reporting earnings here towards the end of August, so keep an eye on them. And last company is Beyond Meat, BYND, right around 125. And I know, guys, this company is on a downtrend as of late. Ever since it hit 167, it's just been getting slammed, right? But one thing to notice and keep an eye on is 125. 125 has been a support ever since the beginning of May. And you guys can see back in the beginning of the year, 125 was a resistance ever since January up to about the end of February, ever since the crisis began. So at this point, if 125 holds, we start to get a break up to the 130s, mid 130s. That is where we could start to see momentum shift here for Beyond Meat. So overall, that is pretty much it. That is pretty much it for this video. Those are the top stocks that I'm watching, some ETFs, and just some thoughts in general. And just to leave you guys on this note, don't rush anything this week. And I always say that. Don't rush anything. If you don't see opportunities in the market, don't buy anything, right? Cash is a position. Don't be scared to hold cash and just be patient for the next opportunity. Who knows? None of these stocks might pan out this week, and I might just be holding onto the positions that I already have. And that's okay, because as we see opportunities open and we are confident on these opportunities, we can take the cash, deploy it, and then make money if our strategy, if our risk management is in place. That is the goal. But if we don't see an opportunity, hey, cash is a position. I'm going to be sitting on cash. And as always, guys, do your own research. Don't buy anything based on my opinion. Always do your own research when you're buying stocks. That's the best. That's the most important, because if you understand on your own what you do, right? If what's the quote, right? The teach a man to fish, you feed him for a lifetime. You give him a fish, you feed him for a night, right? That's where I want to end off this video. And hit that like button. Again, 400 likes is the challenge for this video. And don't forget to join our Strive Smart Discord. It's free. And our Facebook group. It's also free. And if you guys want some free money as well, why not? Everything is free here. Get your 2 free stocks from Webull, valued up to $1,400, link down below. All you have to do is deposit $100. You get 2 free stocks, and I also get 2 free stocks. And I do appreciate you guys if you do use that, as that money does help me out and support all the free content that I'm putting up here on YouTube. So I'll catch you all in the next video. Thanks for watching. As always, stay safe out there, guys. Crush the markets. Peace out.